I want to get now a take from a market historian. Wharton School professor Jeremy Siegel joins us now. It's good to have you, Professor Siegel. So do you think that the Trump rally can continue?
Oh, yeah, most certainly. I was quite interested, and he said, I'm not going to guarantee a rally. There could be dips. We all know that can certainly happen. You know, Trump is the most pro-stock market president in history insofar as measuring his own success or worth by how well the stock market does. However, there are many things that can happen that are beyond his control that can give us a bear market. You know, the business cycle is a part of a capitalist economy. There could be external events. There could be other geopolitical events. Nothing is guaranteed. What I think is guaranteed is that he won't knowingly do anything that he thinks will harm the value of the American market. And I say knowingly because there's always that law of unintended consequences. You know, many times we don't realize some things we do might not be in the best interest. But it is really, I mean, it's exciting. This morning is exciting to have a president that's pro-business, pro-economy. I mean, it's not just the stock market. It's I want to make Americans better off. I want to make, you know, corporate America better off, to make the American worker better off. I mean, there's a feeling, a very good feeling, pro-business, pro-excitement. That's certainly good for the stock market. I
wonder if that's why the market isn't as concerned about tariffs, because of this idea of a Trump put, that he's not going to let the market fall apart or the economy, even if, as we know, tariffs can have a disruptive effect on the economy and on inflation, and the market doesn't like them.
Yeah, absolutely. I mean, you could say there is somewhat of a Trump put, like we often talk about. Is there a Fed put or a Powell put? Neither of them, again, can ever guarantee against a bear market. But I think what's happening is the market is also looking at his first 4 years. And certainly, I mean, he did raise tariffs, to be sure, but not anywhere as much as he threatened. I mean, I'm pretty amazed at this invitation to Chairman Xi of China in the inauguration. Is this, hey, let's talk now so I do not have to put high tariffs on you. It'll be really interesting to see if there's going to be any response there. But I think it's, hey, let's talk. And we know that the Trump position is, I want to talk from a strong position, and then we can negotiate down from there. And I think that's what the stock market feels.
Yeah, he did. He made an oblique reference to that with Jim. Certainly a spokesperson mentioned it on Fox this morning. By the way, no Chinese leader has ever attended a U.S. inauguration, and no foreign head of state has attended one in at least a century. That would be amazing, Jeremy. I wonder, though, what you make of some of the contradictory stances regarding, as Sarah put it, tariffs and deportations, and then this notion that he can get groceries, in his words, affordable again. Do those two things, is there a collision there?
Yeah, there is. And I mean, you know, tariffs and the immigration issue or deportation, as it will probably turn out, are the biggest question marks, certainly of the new administration. I mean, Jay Powell, in recent interviews, you know, he was asked, should you react to the tariffs? Should you react to this? He said, we just do not know what is going to happen. Well, if the chairman of the Fed does not know, I don't think anyone else really knows how this is going to work out. And it's really going to be a way to see. I mean, how can he bring productivity is what really does bring prices down, as well as responsible Federal Reserve action. I mean, those are the two ingredients. We can get productivity up by less regulation, which he wants. That is disinflationary. Of course, AI, which he also mentioned, is a potential for a very disinflationary force in the economy. Those two factors moving forward, I think, will do a lot to solve our inflation problem.